All right, let's dive right in. Today, we're taking a close look at the crypto mining stock Bitfarms, ticker BITF. And the reason we're looking at it now is because, honestly, the data is telling two completely different stories at the exact same time. So, we're going to figure out what's really going on.
So the big question for Bitfarms is pretty simple. Where does it go from here? I mean, the technical charts are sending some seriously mixed messages. It's a classic tug of war between the bulls and the bears, and today, we're going to break down exactly who's pulling on which side of the rope.
And believe me, the stakes at this point are incredibly high. This number, 7.95, is the current risk-to-reward ratio. Now that is a very favorable number. It's basically telling traders that for every $1 they risk, the potential reward is nearly 8. It means getting the direction right from this point could be extremely profitable.
Okay, so to understand what's really happening with this stock, we have to look at the two competing stories playing out in the charts, because it all depends on your time horizon. Whether you're zoomed all the way out looking at the long term, or you're zoomed way in on the immediate future, you get two totally different pictures.
And this slide just lays out that conflict perfectly. On one hand, you've got the long-term trend, and it looks strong. The price is holding above key long-term averages, and its linear regression, which is just a fancy tool that shows the main trend, is clearly pointing up. But then on the other hand, the short-term picture looks, well, weak. You've got negative indicators and some pretty clear signs of selling pressure.
So let's look a little closer at the bull case. The price is still trading above its 50, 100, and 200-day simple moving averages. That's a classic sign of a healthy long-term uptrend. But what's really interesting, as you can see from the chart, is that linear regression trend line. It shows a really reliable upward path, and right now, the stock is trading over 26% below where that trend line predicts it should be. You know what bulls see when they look at that gap? A major discount.
But then you've got the bearish side of the argument. The price right now is actually below all its key short-term moving averages. The MACD, which is a super popular indicator for tracking momentum, is turned negative and it's heading down. But maybe the most concerning signal for the bears is a technical pattern known as a volume trap.
So what in the world is a volume trap? Well, it's a bearish signal that happens when a stock's price is moving, but it's not being supported by strong trading volume. It can be a huge red flag that the big institutions are quietly selling off their shares, a process they call distribution. And the data we have actually confirms this, showing a negative value for the accumulation/distribution indicator, which points directly to this kind of hidden selling pressure. Okay, so we've got the long-term uptrend fighting against this short-term selling pressure. Now let's see how that battle is shaping up around the specific price levels that are probably going to decide the winner.
These are the three numbers that matter most right now. Think of 379 as the ceiling or resistance, and think of 341 as the floor or support. Right in the middle is the pivot point at 354. The stock's next big move, it's almost certainly going to be triggered by a decisive break of either that ceiling or that floor.
This number here helps us understand the stock's personality, you could say. It's the average true range, or ATR, and it's sitting just under 49 cents. In plain English, that just means on a typical day, Bitfarms stock swings by about 49 cents from its high to its low. This tells us the stock has a healthy amount of volatility, so a break of those key levels we just saw, yeah, it could happen really quickly.
Now, to make things even more interesting, there's a key counterpoint to all that short-term bearishness. Other momentum indicators, like the stochastics, are currently in very low ranges. This often suggests a stock is oversold, which basically means the recent selling pressure might have been a bit overdone and the stock could be due for a rebound. So, we've gathered all the evidence: the strong long-term trend, the weak short-term momentum, the critical price levels, and those oversold signals. Now, let's put it all together and look at the three most likely scenarios for what happens next.
Based on the current data, the bullish case has a slight edge, with a 40% probability, but the bear scenario is a very close second at 35%, with a neutral, just kind of sideways market at 25%. It is an incredibly tight race, and it all comes down to which of those key price levels breaks first.
So here's what the bullish outcome would look like. The trigger would be a strong, confident break above that 379 resistance level, that ceiling, ideally with a big spike in trading volume. If that happens, it would signal that the long-term uptrend is taking back control, and the next logical price target would be up around the 420 mark.
And here's the bearish alternative. The trigger is the exact opposite, a decisive breakdown below the $3.41 support level. If that floor gives way, it would basically confirm those bearish volume trap signals we talked about earlier, and that could open the door to more selling, potentially pushing the price down toward that $3 psychological level.
And finally, you have the neutral scenario. This is what happens if neither the bulls nor the bears can land a knockout punch. The stock would simply fail to break out in either direction, leading to choppy, sideways trading, basically caught between support and resistance, roughly in that 340 to 380 range.
So really, the crucial takeaway here is this. It all boils down to a classic technical battle. Is the underlying strength of the long-term uptrend going to be enough to overcome the immediate short-term selling pressure? That is the entire story in a nutshell.
And that leaves us with the ultimate question for Bitfarms. The battle lines are drawn at support and resistance. Which one is going to break first? The answer will likely set the stock's direction for the foreseeable future.